With that, I'll introduce our moderator for our next panel, which is on the state of InsureTech in 2021. Chuck Svirk is with Mass Mutual, and Chuck, I will hand it straight over to you to take it away from here.
Hi, my name's Chuck. I'm a principal with the Mass Mutual Ventures team. We have $300 million under management investing in fintech, insurtech, and enterprise software businesses. We started this fund about 7 years ago, and you can see everything at massmutualventures.com, but have about 32 portfolio companies inside the portfolio today. 2 of which are here today. So I just want to take a second and thank Howard and Nick and the Dune Insights team for having us today. But yeah, we were lucky enough to invest in Snejina's company, Insurify, and Chris's company, One Inc. I wish we had also invested in Sean's company, Kin Insurance, but hindsight is 2020. But excited to kick off the conversation. So I'll pause here, and I'll maybe starting with Snejina and Insurify. I'll allow the other panelists to introduce themselves and their company and give you a little insight into what they're working on.
Thank you, Chuck. Nice to meet with everybody today. It's a pleasure to be on the panel. My name is Snejina Zacharia, and I'm founder and CEO of Insurify. Insurify is reinventing distribution in the United States with artificial intelligence and advanced analytics. We are building the future of the way people search, compare, and buy insurance online. And we have been successfully building the business in P&C and actively expanding in other verticals.
Great. I'll let Chris or Sean jump in next.
Sure, I'll jump in. Hi, I'm Chris Ewing, CEO, co-founder of One Inc. And we are modernizing the insurance industry through a frictionless payment experience. So we're a payments provider solely for the insurance industry. My background is from insurance. Was co-founder and helped run 2 managing carriers in an insurance company. So great to be here. And I must say, for anybody out there that's looking for a great person to help you get going with investments and stuff, Howard's the guy. He literally helped us get off the ground and has been just a great investor. So really appreciate it. And nice to see everybody. And great, I see you, Charles.
That's great. Yeah, so maybe, and then we'll let Sean. Sean.
Hey, what's up? I'm Sean. I run Kin. Kin insures homes that are in riskier areas. And, because of what's happening now with global warming and the weather, that is actually almost everywhere. About half of this is one of society's biggest problems is how do we adapt to climate change? And one part of that recipe is insurance, but you can't do insurance the same way that you've been doing it for 100 years. And unfortunately, most of the insurance companies are 100 years old. And so at Kin, we do it differently. We do it with a really high-tech approach with massively more data than our legacy competitors. We also do it direct to consumers. We're eliminating a lot of waste from the value chain. And it allows us to very accurately price risk and insure buildings in areas where a lot of other insurance companies don't want to or are not able to profitably insure those buildings. We've been doing it for about 5 years.
That's great. Thanks, Sean. So I think we have 3 really interesting perspectives here. The one of a digital agency, digital broker, the other of a full stack carrier. And then I would say the other being kind of a core infrastructure provider to the space. But just looking at the differences in distribution, I would say between agencies and carriers, maybe each of you, maybe starting again with you, Sean, how does Kin, think about distribution? And then we can move to Snejina and have Chris kind of weigh in too as an infrastructure provider.
Yeah, insurance is a really strange industry because, it's a virtual product and yet it's distributed through physical stores, which is kind of funny. The majority of insurance products are actually these are sold through branches. And if you think about how an insurance company, traditional one, goes to market, they're doing 2 things. They're doing mass advertising, and then they're placing their product sometimes exclusively, sometimes alongside other products in physical branches. And the branch network of insurance is like insanely deep. You know, I don't know about you guys, but like in my town, there's one street and there are like 5 insurance agencies on this 3 blocks in this one street. And it's like, wow, that is a lot. There's 1 bank branch, you know, there's like 2 bakeries, there's 2 coffee shops, there's 5 insurance agencies. That's really weird. So I think distribution hasn't changed very much. You know, this is at a time when most people, in fact, almost everybody starts their insurance search online. They don't necessarily finish it online, but this is what people expect. This is how they buy everything else, including physical products, which is pretty funny, right? Like I buy all my, like it actually is really useful to go to a shoe store to try on shoes. Yet I still buy my shoes online because it's more convenient. You don't need to try on your insurance policy, so you might as well buy it online. So I think there's like this huge shift that's taking place, and the carriers haven't really kept up with consumer expectations. You know, I think the other thing is, you know, the power is really shifted to the distributors, and the distributors are the ones who have the customer relationship, and that's the thing that's sticky, and that's the thing that's valuable. And you know, I think a lot of insurance companies are realizing now that they actually don't have a relationship with their customer. They have a relationship with an intermediary who has a relationship with their customer. And that maybe isn't a very durable or long-term business model.
Great. Snejina?
I absolutely agree with Sean's points. Distribution is shifting online, and it's exciting to see that carriers are moving fast forward in that direction. Over the last 20 years, there have been many startups that have tried to rebuild distribution online. And I think the time has finally arrived when the customers are ready, but also the carriers are ready. So what we have seen over the last 5 years is the 2 winners in the direct-to-consumer market are Geico and Progressive. They own 54% of the direct-to-consumer channel. Majority of the other carriers are either losing market share about 5%, or at best, they might be flat. At the same time, overwhelming percentage of customers, over 75, even before COVID, are starting their shopping experience online, but only 25% buy online. We have been able to build a platform that is 3 times the industry average. And the reason for that is that finally carriers have woken up to the idea that their APIs are in place, available for mega distributors like Insurify. Also, they have built online buying capabilities to allow customers to buy the way they like to buy. And if we are enabling the experience that people want, then we are ultimately delivering on the customer's promise. And the way we have built the future of distribution at Insurify is personalization of the customer experience, making sure that customers only select from the subset of carriers that are best fit for their risk profile, so that we can optimize for customer experience and satisfaction, but at the same time optimize for the carrier satisfaction and profitability, because carriers get to pick which are the right customers that they're best fit for, versus trying to bid on Google and compete for every single keyword. Another key area that we have been able to really optimize on is personalizing on the recommendations that we provide for coverages, and really giving the power of the consumer to decide what the right type of insurance is for their needs. The existing broker relationship is more of a black box. You call an agent and maybe you get 2 quotes, and you're hoping that those 2 quotes are the best fit for you, but you don't really see the numbers. Where we're really shifting the paradigm from insurance being sold to insurance being bought, and we're really empowering the end consumers to make that decision.
Can I ask a question really quick? Do people still sometimes have questions that they want to talk to a person about, or email a person, or are you finding that they don't need that anymore?
100% they need that. And we've always said it's not about shifting people from one way or another. It's enabling the experience that people prefer, which means if their best way of buying insurance is through chat, give them that option. If their best way of doing it is self-service online with 100% on their own, or with self-support, provide that. And if they need that personal experience on the phone, then you better provide the most integrated online to offline experience for them to have a smooth experience.
That's great. So we have Insurify that, I would say facilitates distribution on behalf of multiple carriers, kind of bringing, I would say, a combined and consolidated experience. And, we have, I think Sean at Kin, looking at, owning the relationship and making sure that you control that experience to remove, friction and the invasiveness of quote, comparing quotes from multiple carriers. Chris, looking at One Inc's distribution, where have the pain points been, the most prevalent across your customer base and customer set in terms of, brokers and carriers?
It's interesting. So in 2003, I ran a large retail brokerage firm in California, and we ended up selling it in 2010. We thought that that's when the internet was really get going, that everything was going to go online, and we were done as a retail provider. So really started trying to work on the shift to becoming being able to sell online. What's interesting is Progressive did the same exact thing, and they created a new logo called Drive for the brokers to sell, while they were going to be progressive.com. It's interesting. It just did not stick back in 2004, 2005. And so they went back to the regular model. And even today, 50% of Progressive's business is sold in retail stores. And the reason why I think that is not because the retail stores are an outdated model. It's that the new model, the new online model, needs to be built in a way that you can still get trusted advice from people who have questions in a friendly way that people don't feel intimidated by, right? So we think of these financial transactions, buying insurance, as very complicated. I want to sit down in front of somebody who can tell me about how it all works, and I can ask stupid questions. And I think people just historically have thought about doing that in person. With COVID, though, I think that this is the catalyst to make it all change. I think everybody is starting to say, well, I don't want to go out and see anybody. Now, how do I do it? And so I think more than ever, the shift is probably going to occur this year, where a lot of what's great about the products that we're talking about here is when you add in AI and other really good ways to get information online, you can start being the trusted advisor without being an advisor, right? You can have your systems be able to do that. And we're starting to see a shift there. What's interesting about insurance as a whole is the software has not really updated enough yet. And so when you look at most carriers, there's direct carriers. So there's the sellers like Progressive and Geico. They sell direct. They've got it down, and they've built great, wonderful online experiences. But there's everybody else who sells originally through the independent agency channel or the brokerage channel. They have not built online, and they don't want to compete with their brokers. Progressive, of course, has proved that you can do that. And so when they start to go online, they're looking for software and solutions that are API driven, so that the API economy can work. And there's still a huge problem on the software side. And obviously companies like Guidewire and Duck Creek are really making a lot of inroads and making it easier and quicker to roll out these big systems. But most of them still have AS400 platforms, and they're still trying to modernize. And that's where we kind of come in. We can allow carriers to act in a digital way with legacy systems as well as with Guidewire. And so we're seeing a lot of customers are starting the transition this year to online and digital everything. And just to show how backwards the insurance industry, 80% of all claims payments that are made today are made by a check. So like, when's the last time you've even seen a check? It's like, I don't even know what that is. But the reason why is because of all these legacy, pieces of software and systems that need to be replaced. And we're seeing just an unbelievable explosion in the last year of this transformation occurring right now. So it's a pretty incredible time to be in the business. And really, I think it comes through the AI and knowledge, so that you can be a trusted advisor online as much as in the store.
That's great. And Sean, how did you approach, I would say, payment infrastructure at Ken?
Yeah, so my co-founder Lucas, he's the CTO, and he was just like, please don't. We're not going to start an enterprise software company. I don't want to have to sell tech to insurance companies because their adoption cycle is just so long, right? And this is one of the issues historically in the industry is like it's really hard for a good software company to make really good software and get it to the insurance companies, because the insurance companies they like just have a hard time adopting these things for whatever reason, historical baggage, incompatibility with other systems, et cetera. So, I think these things really play well together, right? Like you have guys like us who are out there doing crazy things, building all of our tech from scratch, going direct to consumer, saying, listen, we want nothing to do with the legacy industry at all, except we'll hire your people, we'll take your customers. And then that creates, this sort of, urgency for people who are trying to sell into that value chain. I think it's really symbiotic. And like the reality is, it isn't the role in the economy for incumbents to innovate, really, right? The role in the economy is for newcomers to innovate and to create the competitive pressure that instigates everybody else to do stuff. So I think it's like really, really healthy. You want to see the company that's been in business for 100 years have an amazing digital experience. They should, and they will eventually. It's just a matter of time. And, they're probably going to need to lose some market share before they wake up and do that.
Great. And Snejina, when we're talking about, cloud versus on-prem kind of walled gardens and payments infrastructure, I'm interested on your perspective, given, kind of how many incumbents and carriers that you work with on a daily basis. How did you guys approach that?
What Chris mentioned earlier with COVID has really shaken up a lot of the industry, and a lot of the 5-year plans for digitization became 3-month plans. Like they all gathered and decided to put enormous amount of money of digitizing and upgrading their systems, their UI, UX, their infrastructure. The way we think about payments or enabling the experience for the end consumer is really, how do we make this frictionless for the end consumer, but also frictionless for the carrier? Because the number one question that we always ask is, how much time will the carrier spend to integrate with us? And our answer is always as little as possible. So what we have done as an approach is we will always choose to integrate in whatever payment system the carrier has available. We'll see how that works. Then we'll start providing them feedback of whether it works or not. I mean, surprisingly, we had a carrier that their payment system was broken for 2 years on iOS devices, to a point where we stopped quoting them for iOS because we were like, more than 70% of your sales are online and your payment system doesn't work for iOS. We have to fix that. But the ultimate goal is to really make the experience based on what the customer wants. So I'll be curious to see how Chris thinks about Venmo and some of these other next generation apps that people are using for transferring money, and whether there is a place where people can start paying for their insurance with their Venmo account, or anything that they're already using on a day-to-day basis. And how we think about that.
Well, and what we're seeing on the disbursement side, so the claims payment side, is people want to be able to get claims payments into Venmo, PenPal, and these alternative accounts, because they, I think we mentioned earlier about how the banking industry is shifting so much. There's a lot of people, especially young people that are driving out there, that just don't have bank accounts. They have Venmo or PayPal, and they use that as their financial means. And so we do support Venmo and PayPal payments, so they can select to get payments out that way. And a lot of people select that method, and then they can then just use that as a quasi bank. And so the times are definitely changing, and it's interesting. On the inbound side, a lot less people want to make payments on Venmo, certainly a lot on PayPal, but it's expanding as we go. Yeah.
That's great. And yeah, really interesting to see, so many different kind of payout types, I would say, come into the market. It's always changing. So we have our first question for the panelists here from Rain, and I'll read it out to the group. And a reminder for the audience, if you have a question, throw it in the chat. We want to keep this, keep kind of an open dialogue here. But the question is, can retailers, brokers, agents remain part of the sales path? Thoughts on enabling the retailers, agents, and brokers instead of just overarching the insurance company? And Sean, maybe I'll start with you, given you're a full stack carrier. What's your thoughts on kind of retail brokers and agents remaining part of the sales process? Chris alluded to earlier on how that has made I would say the value chain a little bit more fragmented when you think about payments from I would say agent distribution or career distribution versus I would say DTC.
Yeah, I mean, I think it's going to depend on the product. And so there's a huge historical precedence here. People still get loans from loan officers. People still buy airplane tickets from travel agents, just not anywhere near as many as they used to, right? Like a lot of the loans you used to get from a loan agent, a loan officer, these are now done online, right? The mortgages are going online, credit cards, taking consumer lending online. So it's just different. You'll see the more complicated transactions are going to be done with more human mediation. And the less complicated ones are going to be done online. The customers feel more comfortable self-servicing, or servicing with the assistance of a CSR. And I think there's some real benefits to that too. Just because you want help from a human, and people love talking to other humans. Let's not forget that. Like it's much nicer to talk to a human than it is a bot. The business model of a broker, the broker does a lot of agent, does a lot of stuff that's not just helping the customer. And years ago, I did a case for a consulting company when I was at BCG. Sorry, I did a case for insurance company when I was at BCG. And I spent a bunch of time sitting in these insurance agents' offices. And we added up I was like 24. So I was like there with the notepad being like, from 12 o'clock to 12:15, he did this. And, the reality is they spent very little time helping the customers. They spent a lot of time wrestling with carriers' antique IT systems. They spent a lot of time building their own business, dealing with the overhead of running a very small business. The average insurance agency is like 3.5 people. And they spent a lot of time marketing. And so I think certain parts of that value chain, the agents are going to be really good at, which is like relating to the person, giving advice. The IT part of it, they're terrible at. The marketing part, they're terrible at. So I think you're just going to see sort of a reorganization of activities, and it's just going to take place over a very long period of time. Even auto insurance, right? This is the simplest insurance product, the one that is most widely adopted direct to consumer. It's still only 25% direct to consumer, and Geico and Progressive have been doing this for 20 years. So it's going to take some time. There's a lot of inertia, and this is a product that people only they don't switch every year. And they certainly don't switch multiple times per year. So there's a lot of friction and stickiness.
Great. And Chris, I'll go to you. How do carriers, using kind of one infrastructure, think about that question?
Well, it's interesting because I don't think that they're mutually exclusive. I think a lot of people think you have brokers and agents, and then you have online. But all that's I think what needs to happen is both carriers and brokers, both, and agents, need to have a double strategy today. That could change in the future. I agree with Sean. It's going to be less and less transactions, I think, are going to occur offline and more transactions online. But what I think people miss is that the actual marketing of insurance is, when you have a retail store, it's like having a billboard, right? So if you put a insurance office in a Walmart and somebody's got to buy insurance, oh, there's insurance, I'm just going to walk over and buy insurance. It's easier than saying, okay, I've got to go to my car, I got to go home, I got to remember to do it, and then I got to log on. Now, for a lot of people, it's not. For a lot of people, they'll go home and do that. And so I think most carriers and brokers just have to have a dual strategy. And I think the ones that are going to be in a lot of trouble are the ones that don't. That's why Progressive's so successful, right? They get all the advertising, all the sales on brokers, and they also get all the direct sales as well. And so what the key is that a broker or a carrier act in a digital way as good as anybody else, and then also take advantage of marketing distribution wherever they think that they can be successful, whether that's in social or retail or whatever else is next.
Yeah, I think there's another aspect to it, which is, if you're able to control and be more targeted about who you're advertising to, that can be really beneficial on the risk selection side. And so I think this sort of gets into what Snejina was saying about Insurify. She's only showing the customers the carrier wants to that customer, or rather she's only showing the carrier to the customers the carrier wants. And so, you know, we do something similar in a direct to consumer model where we really only we'll try as hard as we can to only market to the customers that we think are going to have a good loss experience and a good conversion rate. And this is a very different paradigm than has been the insurance industry historically, where it's been very untargeted. And so you end up sort of playing hockey goalie and trying to bat away all the risks that you don't want, you know, wasting a lot of money and effort and actually not giving a good customer experience. Like as a customer, it sucks to see an ad for an insurance company and be like, I want that. And then you show up and they're like, no, not you. Like, that's not a good experience. So I think the two
only
things
in insurance.
Yeah. And Snejina, what about you as an agent in a new form factor or the agent of the future, you know, watching how products convert across multiple carriers or different personas? How do you see the agent role faring over time?
I think there will be a lot of consolidation in the industry. I think the future of the agent is aggregation, because the biggest problem or the biggest concern that agents have is the ability to be able to attract customers digitally and then service them digitally. And if these two are moving at a super fast rate, and even we see that carriers are struggling with both the acquisition side as well as the UI UX side, and carriers have 100 times, if not 1,000 times more money to spend on both improving their UI UX and improving customer acquisition. For the agents, or especially for the small brick and mortar agent, that is really a problem. So there are two ways that agents can potentially remain relevant. Either they can participate on platforms like Insurify, where they might be able to be part of a super aggregator and allow themselves to service as a digital agent as a franchise, or like on the behind the umbrella of a bigger company like our company, or I don't know what else. I don't think that there is another future. The way Insurify is solving for that problem, and to the point that Sean made, we don't have an issue with a bad customer. No customer on the Insurify platform is a bad customer. And the benefit of that is that we aggregate everyone. We have carriers that are specializing on high-risk customers and high-risk drivers, and we have carriers that are specializing on a super preferred or the high net worth. And so that allows us a lot of buying power, because there is not one customer that we will say no to. We will just route them to the appropriate subset of carriers that are best fit for them. So the way we are really reinventing or rethinking the agent of the future is really coming back from the customer point of view. What do people want? Number one, transparency. The average customer wants 5 to 6 quotes on average, and they'll give up after the second quote if they go through the traditional route of comparing quotes. What else do they want? They want to feel like they're in the driver's seat. So we are giving them the right recommendations through the transparency to be able to make these decisions on their own. And then we are enabling the online experience as much as we can by more or less putting all the carriers, regarding how advanced they are in UI UX, on the same level, which is scary for some of the largest carriers, because we are putting a lot of the regional carriers that might be way behind in their own UI UX on the same level. But what we have found is that ultimately it's the customer that drives the decisions, and we are more or less an enabler of that customer experience.
Thank you.
Yeah, I've got a question for you, Snejina, really quick. So the carriers on your site, like, why does a customer choose one carrier versus another? Like, how are they deciding?
Price is a big factor for the selection process. And we do know that brand does matter, and brands, there is a 10 percentage points on brand, but all things are equal, majority of the people will pick from the top 2 cheapest prices.
That's really interesting. And then I had a follow-up question. I'm so fascinated by this. So you have all these customers on your site, like, how long is it before you start saying, and you know what they want, right? How long is it before you start saying, hey, this set of customers, I could actually make them a product that's way better than what any of these carriers have? Is that something you'll ever do?
We will, but we are looking at this in terms of where are the major gaps that carriers are under presenting on the platform, and thinking through innovatively, filling up those gaps where we see carriers are not very well equipped to be able to service as customer needs. What we are looking at, Sean, is really building out the super agent. And what I mean by that is building out towards MGA capability across the value chain. So we don't need to start and stop with one. We will build it for everyone that is willing to work with us.
It's going to put you in a really powerful position. That's cool.
Well, when you decide to make your own products, let me know. That's exactly what we did. We started out as a retail broker and then became a carrier. So I can help you.
And Chris, maybe you can take this question from Philip. He's saying, will the shakeup that Sean alluded to including companies selling, product across multiple lines such as P&C, auto, and life, or will the agent community be enabled by InsureTech to remain fragmented? So I guess, from your view, where do you see more pain points in the value chain related to monoline carriers versus, line carriers? That's what really Sean's question to Snejina, kind of filling product gaps, but interested in your view.
Well, I think the biggest fundamental shift that has occurred or is occurring, especially with a lot of the API and microservices and AI, is the ability to create new insurance products. And those new insurance products, or for old insurance products, act in a new way. So a great example of a new insurance product is a insurance that insures a lease rather than doing a deposit. It costs a lot less money. It's much more efficient, and renters love it, right? It's brand new thing. And what is using it in a different way is, for example, auto insurance, pay as you go and things like that. Those are absolutely disrupting the industry. And as more insurtechs that come along, like Sean's company, that do things in a different way, it really does segment out, or it takes, you have large companies doing all things one way. And then Sean comes and takes a piece, and then other people come and take a piece, and then you have these brand new products. And that is, I think, going to make the biggest change in the insurance landscape over the next couple of years, because it's going to force carriers to say, okay, well, how do we innovate and how do we create new products? And what do we do about our legacy software that we have, or even newer software? How can I create a product in, a month rather than spend $5 million and take a year or 2 years? And it's that rate of change that InsureTechs have the benefit against the insurance carriers. They can just wake up and say, I'm going to program this in a very short and simple way, test it out and see how it works. Where the legacy carrier goes, okay, well, I got to get on my main system. That's going to take 2 years. It's going to cost $1 million. Well, I don't want to bet on lease insurance. I'm just going to bet on a new homeowner's product. And that's what really stifles innovation. That's what's been so exciting about all the new products and services that the InsureTechs are coming up with. And they absolutely are going to win unless the larger carriers start to listen. And that's why you're seeing a lot of the acquisitions come through, because they can inject that kind of new innovation into their organizations in a way that large carriers just can't do it.
Right.
Yeah, I think I'll take the counterpoint on that for just a second. This is counterintuitive, but I'm not as optimistic as you are, Chris, because it's so hard to get a new company started. The barriers to entry in the insurance industry are really, really high relative to others. I think capitalism only works in the way that you described when you have free entry and exit, and we really don't. And so we actually have a situation where this very important part of the economy is more or less controlled by like an oligopoly or a cartel. And it's, there's been a lot of regulatory capture. And so I think, the VC appetite for funding things like us is wonderful, but there really aren't that many. In fact, I would say even with all the excitement around InsureTech, we still under index with respect.
Certainly to get the carrier support with the surplus requirements is a huge burden. Yep.
It's really expensive. So I think it would be cool if ultimately we could have some new models that would really enable sort of the small scale testing for tech companies to, come in and try something and see if customers like it. But as of right now, there's just a lot of overhead.
Right. Yeah, and I'll add on to that point. I think you're starting to see, the third wave of an insurtech where you're seeing a lot of technology be instilled in new models of wholesalers, BGAs, and IMOs. So if you don't have to go and do the licensing and find capacity, but you could work, with the fronting insurer, find paper, build a new product, go work with the capital markets directly, or really go rent out another product and embed that seamlessly into your distribution, which I think is a nice segue to our, a third segment here of embedded kind of distribution. I know there's another, panel after us talking about broadly financial services, but, we've seen a lot of embedded distribution take place, within insurance and technology. And Sean, you alluded to, gaps on Insurify.com, Snejina's ability to go and work with other carriers to build a product that fits gaps. So she makes sure that there's not so much fall off rate to consumers who can't really fit their needs on their site. But yeah, Sean, how do you think about, being a P&C carrier today, and being a one-stop shop for all kind of protection needs for consumers?
I think there's a really interesting historical precedent that you're alluding to, and it plays in two ways. So what happened in the payments and lending industry with respect to the rent-to-charter ecosystem really enabled like a lot of cool business models and cool products. That ecosystem does not exist in the insurance industry right now. Like there is this idea of it, it's called a fronting company, but it's not anywhere near as efficient as the rent-to-charter ecosystem, which really isn't that efficient to begin with. So it's very, very inefficient, super, super hard to work with it. And actually what you've seen is most companies that got any level of scale, most tech companies have moved away from that as quickly as they possibly could, because it's a very friction-full business model and it makes it really, really hard to innovate. So there's that. The other interesting one is, payments, for example, and lending to a lesser extent have gone almost completely embedded. It's really hard to identify a significant payments company now that's not in some form or fashion tied to a software product. Right? Who's winning in payments? It's Square, it's Shopify, it's Stripe, and they're not just payments companies. There's some other value proposition and payments is embedded in it. People think that's going to happen in insurance. I completely 100% agree, but it's not anywhere near there yet. It's just not like the contexts into which it's embedded are not significant enough, and the number of competitors that are like able to embed in a seamless enough way. I think outside of a handful of examples, I think like really simple products, travel insurance is probably the one example where you have a meaningful embedded market share. And beyond that, it's really, really low, even in things that make sense, right? Like, so like we do homeowners insurance. It would make a lot of sense for us to embed in a realty site or in a mortgage site. But the reality is there's a very small number of transactions flowing from those contexts relative to the overall transaction volume.
Yeah, this is one of my favorite topics because I think that the concept of embedded insurance is I buy something, and while I'm buying that, I can add insurance to whatever I'm buying. In auto, buy an auto and then embed the payment for insurance inside of that, something Tesla and GM are doing, and other companies are going to be doing. And I really think that the API enablement and going to those points at which you are buying things that need insurance is ultimately is the most frictionless place to do it. And so making sure that agents and carriers have access to those is going to take some time, but it is interesting what Tesla's doing. I mean, they are getting a captured payment and making it flow through. On the homeowners side, it's a little bit harder because of the inability to pay commissions and stuff to escrow companies, as an example, at closing and things like that, because regulatory things get in the way. But I think embedded insurance is really a new frontier. It's something we were turning to before we sold our companies, and I think it's pretty exciting.
So my take on embedded insurance is integration. Anywhere that there is a customer that might have a need for a different insurance product, if you can make that experience as seamless as possible and as integrated as possible, then you will always win. So we have very successful partnerships with the majority of the neobanks in the United States. We just today launched a very big partnership with one of the largest OEMs in the world, which we will be announcing next week. And we have great successful partnerships with dealerships and with mortgage companies. So the way we look at embedded insurance is that it doesn't have to be fully embedded from the very beginning. We can start a partnership with a very simple trackable URL and then slowly transition to making that experience as smooth as possible, whether it is within a digital app or it is within a website, as much as we can transfer in terms of user information and user experience, and then use that information to personalize the experience of the end consumer, we are winning.
So I guess that's the answer. We can replace digital storefronts with, retail storefronts with digital storefronts as embedded applications. It makes all the sense.
That's how we think about it, yeah.
Yeah, and so I think embedded sort of point of sale or being able to customize that's show that front end, and I think Sean raises a good concern that if it's not highly contextual to I would say checking the box or the requirement in terms of facilitating a transaction, your conversion is not going to be great. But there are products like auto, being with the RMV or the DMV, where a certificate of insurance is a requirement to getting your car on the road. Same thing with closing a mortgage with a homeowner's policy. But I think as there's more embedded insurance applications, there's verticalized, I would say, companies like One Inc. that need to solve some of the core infrastructure, because you can't just be a broad horizontal payments company and come into the I would say insurance or banking world, just given the regulation and I would say the nuances and complexities to those products and payments.
One of the things on our roadmap, it's interesting we got here, is to add point of sale software for our carriers that don't have, really advanced systems in the back end to allow them to sell products at checkout for various different things. So it's one of the pieces that we're adding to our platform.
Can I throw in a question on this embedded finance issue, since it's a kind of a bridge to the next panel anyway? So there's been a lot of talk about embedded finance, certainly in banking. And I'm just curious how you view the two verticals as maybe similar or differently. In other words, what are the challenges that are unique to the insurance sector that would make it more difficult or not for embedded finance to take off as it seems to be doing in banking?
Well, it's interesting. In banking, a lot of the stuff that's taking off is alternative banking type services. And I think in insurance, to Sean's point, because you have the Department of Insurance and regulatory, and because we don't have a robust ecosystem for sharing assets, it is more difficult. But that doesn't mean it shouldn't exist and isn't going to exist. Because I think if we can uncover both of those hurdles, which I hadn't thought about, Sean, it's a great point. Technology, being able to create products very quickly and easily, along with being able to utilize the regulatory framework that I need to utilize and be able to make those products at record speed will fundamentally change and make us act more like the banking industry, where it works, I think, a little bit better today.
Yeah, I think there's just a gap. I mean, they're following the same trajectory. I think like one of the easiest investment theses to follow is this happened in fintech, it's going to happen in insurtech 5-10 years later. Mm-hmm. We're just behind. If you think about like when the big, increase in insurtech funding started, it was really 6-7 years ago, and that was a much later. Most of the fintechs was 10-15 years ago.
This has been a fantastic discussion. Charles, you're a terrific moderator, and everybody else is a terrific speaker. So I don't know what else to say.
Yeah, I think it's the entrepreneurs. When I just have to ask a simple question and they can take the floor, it's easy. But thanks for having us on here, and And congrats to Sean, Chris, and Snejina. I mean, Insurify, Kin, and One Inc. are certainly role models in the InsureTech and kind of venture capital space. So, you know, happy to be on stage and honored that you guys took the time. So thank you again.
I think you guys are going to give all the startups listening the wrong impression. You know, it's so easy to make a successful InsureTech company because look at all these 3 companies here doing so well. It just must be, you know, statistically it's obvious that it's easy, right?
It's survivor bias.
That's right. And nobody's talking about the first few years.
Excellent. Well, Nick.